Good morning, traders. My name is Pete, and this is Trading Kitchen. Welcome to this new video. It's Monday, so like every Monday, let's have a full overview on S&P, Nasdaq. Looking for some good opportunities to trade. And today, let's have a quick multi-time frame analysis from the beginning on EURUSD. So I want to show you how I make my full analysis. Okay, to understand the bias on the long term for a long term trade, but also on intraday for intraday strategy. Okay, so this let's start with S&P, and these are the the drawings that I made 2 weeks ago. Okay, so basically, on a daily time frame, it's pretty much obvious that after a strong movement, a strong bullish, we all know, I suppose, that we are bearish because we have higher highs and we have lower highs and lower lows. Okay, Uh, here we do have liquidity, fake breakout, and then finally broke this last structure. Price reacted from on the demand zones that I highlighted the last week. Break the structure, the nearest structure that price do have. Fake breakout, retest the same demand zone, and another break of the last structure, retested, and now probably will go up. So it doesn't mean that for a middle time, a middle term trade, we probably are on a bullish overview. And above all, for today and probably this week, we are in bullish for the intraday strategies and for intraday trades. As I highlighted this last week, this is a very interesting liquidity area, because price touch once, twice, three, four times this level, this zone, means that with and created this long tails. It means that there are a lot of liquidity over there that must be grabbed. So I just wait on a long term for a middle and long term trade. I just wait for the price to reach this dominance and break this structure and reach the 25 projection of the last range, which is this one. So this could be the first trade, and the more aggressive one, which is, in my opinion, is not so aggressive. Obviously, if you want to be conservative, you can move your stop loss few pips above this high. On my personal trading style is considering a trade at least with the 1.3 risk reward ratio. So for every $100 that I risk, I want to profit with 300 dollars. Okay, the conservative trades could be waiting for the trade for the price to reach the 75 of this range, which is the last range that broke the last structure. And we have here inefficiency here, so this could be good as well. Okay, it could be very good as well. But if you move a stop loss here and then enter in the first trade, using a stop loss a large stop loss, which is not a mistake, in my opinion. You could enter the market with a nice risk reward ratio. If you don't want uh, to use a pending orders, you can wait for a trigger. Okay, if you don't have your personal trigger, I will give you my personal trigger, which is the wolf wave pattern. That is a manipulation pattern. Is a very good, a very high profitable pattern. Okay, which is this one. So sorry. So you have to wait for the price to reach the area that you want to consider. This area, obviously. Okay, so in this area, I mean the wolf wave pattern or the trigger must be inside the area that you want to consider. In this case, the premium in the premium area for a bearish trade. Okay, so in this area, this is okay. What must happen? And the wolf wave pattern basically is a manipulation pattern which we have a trend line, okay, and the price go up, fake breakout, re-enter inside the zone, uh, price grab all the liquidity here, all the buy stop orders, re-enter inside the zone, uh, breaks the last structure. This is very important, okay, because this is not a wolf wave pattern. This is a wolf wave pattern. Okay, you have to wait for the clear breaking of the structure. Okay, retest the structure, retest the 50% of FIBO of the last range. Okay, and you can enter here with this trigger, so with the stop loss a few pips above the high. With this trigger, you can increase your win profit and rate and your risk reward as well. Okay. The scenario could be also this. I mean, price make the wolf wave pattern and then strongly move down without retracement, and sometimes it often happens, to be honest, but I don't care. I mean, there are so many opportunities to trade during the week, and I prefer to have a risk reward, uh, um, a higher risk reward. So the retracement is a better opportunity, on my personal opinion. Okay. The third scenario could be this one. So retracement, uh, temporary profit, and then no, sorry, my drawings are are not good. So okay, so this is the standard wolf wave pattern. Okay, the third scenario that I told you is this one. So temporary profit, and then price will grab the liquidity over there. Okay, stop loss, and then finally move strongly down. Okay, so how to avoid this? Using a larger stop loss, which is pretty much difficult, and this could be also considering a lower risk reward trade, which I don't like. How to avoid it? Just take a stop loss and then re-enter. Okay, re-enter when you see an engulfing maybe over there. Okay, or you can also wait for a break in the other structure and then a retest, which is not happening often, but when you see the wolf way pattern and a break, stop hunting, okay, liquidity grabbing, it means that, and then the re-enter of the zone with an engulfing, it means that the manipulation is on. Okay, so you can be pretty much sure that the engulfing uh, inside here. Okay, so is very a pattern and a high profitable pattern. Okay, so you can easily open trade on the breakout of the minimum of the engulfing pattern, and then the target will be always the same with the stop loss a few pips here. Okay, we have no time, but let's have a quick overview on EURUSD. So it's pretty much the same. Okay, it's pretty much the same in Nasdaq. We didn't see Nasdaq, but it's pretty much the same on S&P. What about Euro USD? So here we have a trend line that is being touched right by now today, and so here we have the structure that had been broken. Okay, so this on a daily time frame we are bearish, but if we see a 50-minute time frame, we clearly are bullish. Okay, so what does it mean for today and probably the next day? We are going to wait for the price to reach the discount zone, which is above the 50, which is this one. Okay, and this is our demand zone, in which waiting for the price to make the pattern and then go long. But we have to be very careful and pay attention to this trend line. Okay, which is a very classic trap that price always makes. So fake breakout and re-enter, retest, and go down. Okay, so today, as you can see in the last 4 hour price, we have to wait obviously, and let's see how it is developing this candle. But if we do have this kind of an engulfing on the 4 hour time frame touching the trend line, this could be also a very good signal. Okay, because the higher time frame and will be lined with a clear bearish pattern. Okay, so everything is in confluence. So in this case, obviously the trade could be this one. Okay, with a target that is going to reach this level. Okay, with a 5 risk reward, which is not good. Yeah, we have this range that we have, that it is the main range that we do consider for an intraday trade. Okay, so for today and the next days during this week, I will wait for the price to reach the discount zone. Okay, looking for a bullish trade, because we do have lot of inefficiency that must be balanced, basically. Okay, so this and this as well. So these are all good levels from which price could react. Okay, obviously, the best one will be this one, which is quite similar, quite close to the 75, which is an algorithmic level, very good, a very high profitable algorithmic level, and this is in confluence with the 50, but I will not consider it. I will wait for the price to reach the zone. Okay, this is my zone for a bullish trade. So from more or less, yeah, here we have also a liquidity level. So this could be my trade with TP around the 25 projection of the last range, and this could be my stop loss with a nice 3.5 risk ratio, which is very good. Okay, so guys, that's pretty much it. I hope you like also this quick, I know, but time is running. I hope you like this quick multi-day frame analysis also with on Euro USD. Let me know what you think about using the comment section below, and let's see on the next video. Thank you very much, guys.